So hello everyone, and welcome to today's panel on innovating and streamlining banking processes using technology and digitization. We have today with us on panel Rajvil Tarwar, Alok, Dr. Esther, and myself Vikram Pandya. I'm Director of FinTech at SPJN, and I'm also heading research at Millennium Venture Capital Fund. We are 200 crore VC fund, and I'm also FinTech Ambassador for Master Government. So I would request, starting from Alok, to self-introduce yourself, please.
I am a chartered accountant and with almost 25 years of experience, primarily into banking. Currently working as Executive Vice President at IndusInd Bank, Mumbai.
Rajbir?
Thanks everyone. It's very nice meeting you all, even if it's only virtually. But I think that's the essence of this conference, of course. I'm Rajbir Talwar. I work for ABN AMRO Bank. I've been with them for 11 years now, close to. I'm in the corporate and institutional bank, and I head up portfolio management in APAC. Prior to that, for the most of my career in banking, I've cut my teeth on financing ships. So far as technology goes, I do have a master's in technology, but I have spent maybe 2 or 3 years in that field. But needless to say, and that's what this panel is all about, banking and technology need to go hand in hand. So I'm here this time.
Esther.
And thank you, and happy to be here with you today from France. And I've been working for the banking sector for 25 years, and especially on payments and international issues. And I have implemented and industrialized the trade finance organization for Natixis Bank a few years ago, and I have created my own company 2 years ago, and I'm working more on Africa and emerging countries, and trying to help companies to scale up their business in our areas, and also trying to explain and to understand new evolutions, innovation, and how it is different or not compared to the past, and if we, as an economist, if we still remain in the monetary theory or not.
Thanks, everyone. So I will start with you, Esther. What does digitization mean to you, specifically when you look at digitization, how it is growing? So what does it mean to you?
Digitalization?
Yeah. So in your opinion, what it is and how it is inevitable, and how do you think it is going to be?
Yeah, I fully share. It's unavoidable, inevitable, and it can be of great advantage for everyone, and especially for inclusion. And it is a huge, important way for everyone to access financial services, and especially in the COVID crisis, we experiment how it is useful to just do your banking operation from your mobile or your laptop, and avoiding to go outside. And so it is very it's positive, but it has to remain, to my opinion, driven and aimed to support people. It shouldn't leave the full space for a machine. It has to remain targeted for people.
Sure. So coming to you, Alok, and then I will come to Rajbir. So Alok, you have been in banking industry for long, and then when you look at in banking specifically, we have so many processes that people would like to digitize, but you know that not all the processes are equal, right? And people will need to focus on the right processes to get proper ROI and good ROI. So which are the processes, in your opinion, typically are ripe for digitization, and people always look forward to doing that?
See, Vikram, while there are, I mean, many aspects of the banking, the whole banking, which needs to be digitized and which can be digitized. So obviously, we cannot discuss all of them. So what I will do is basically cover a few of them, which I personally feel is very important. And of course, I mean, I look at some of the sectors. So I'll talk about digitization in those sectors basically. Otherwise, as I mentioned, there's a huge scope of digitization. Banking itself is so huge. I mean, obviously it's impossible to cover the digitization aspects of the banking in one session. So I'll just stick to a couple of, or maybe a few areas where I feel digitization is happening on a very aggressive this thing level. So the first area where I feel, I mean, digitization is happening and is going to happen at a very aggressive level is supply chain finance. So supply chain has existed as a product for many years in India and globally. In India, but it is restricted to only a few banks for various reasons. Even though the potential for the same is actually unlimited. I mean, even currently the size is about 1.1 lakh crore, but the actual potential could be at least 25 times of that. Okay. So what has happened? I mean, even though supply chain finance has existed for at least 20 years in India, okay, but suddenly, I mean, other banks are looking at it, okay, who were not looking at it earlier. So two things have happened, and both the things have actually happened because of digitization element involved in those two actions. First is the government push. Okay, so government has launched digital platform called Trades, okay, where the invoice financing happens. I mean, supplier invoice financing happens, and government has given three licenses for launching of this Trades platform. Other thing that they've done also is made compulsory for PSU companies to compulsorily route their invoices through this platform only. So that has given this impetus. Second is there are many fintech companies who have successfully digitized the whole model. Okay, and of course, traditionally everything used to be in the physical mode. Okay, so that physical that digitized model which these fintechs have come up has caught the eyes of the bank. I mean, these fintech companies have very successfully implemented the supply chain finance thing, and it has made banks realize that SCF can be built up efficiently without risk. Okay, so now these banks have started actually acquiring these fintech companies, or have started partnering with these fintech companies, realizing that, I mean, the supply chain finance can be done successfully and can be, let's say, ramped up very successfully and without much of it if we go digital way. So that's one area which is catching eyes of the banks, and a lot of banks are getting into digitized form of supply chain finance, either on their own or let's say in partnership with fintech companies, or let's say they're acquiring fintech companies. Second thing is second area is end-to-end digitization of the entire lending process. Okay, so taking cue from this supply chain finance, actually banks have also started actually working on end-to-end digitization of the lending process, right from of course the customer identification has also started in a digitized format. And once the customer has been identified, okay, now, so right from collecting documentation, okay, to processing the application of the opportunity from a credit perspective, to doing the documentation digitally, to disbursing the money, everything is now in fact, has started actually in a small way. Some banks have already started this end-to-end digitization of lending process. So that's one very big area. Traditionally, of course, globally as well as in India, the loan process happens in physical form. So so this again is very big. I mean, and of course, I mean all of these leads to the cost. I mean, cost efficiencies. I mean, the timing gets reduced, and of course, the convenience for the customer.
Sure. So thanks, Alok, for your thoughts. So basically, if I were to summarize, you mentioned that lending and supply chain finance is something which is getting automated by most of the banks. I agree with you. And the benefit is transparency, efficiency, productivity gains. And then you are having, even on the ecosystem level, more people can become part of the platform itself. And then you unlock more potential. That is also true. So coming to you, Rajbir. So as he mentioned, as Alok mentioned, that trade finance is one critical part that people try to automate. What do you think when it comes to trade finance? What is unique about trade finance, you believe, that it has its own evolution, and you need to think about automation in a different manner? And digitization in trade finance has multiple aspects. Not only that you need to onboard partners, you need to also make sure that the finance bit of it, right? So whether it is quasi lending or whether it is payment, so that entire peripheral area is something you need to include as well. So what is your thought on that?
Yeah, it's a good question. I have to say that on the outset, I'm not an expert on trade finance, but I think the way I would like to answer this question is more broadly. Vikram, if you let me. I think just from my own experience, and I've seen, and I'm sure Alok has, he's been in the industry, or at least in banking, longer than I have. We've seen an evolution, and that evolution is only gathering pace. As the famous book says, the enemy is at the gate. But which gate is this? Is it the retail banking gate? Is it supply chain management gate? And how do we determine where digitization is being used earlier, lower hanging fruit, as many say, and where will it come a bit later? So if I can put some perspective to that, from my perspective, it is process-driven banking is ripe for digitization. And by process-driven, as Alok very rightly pointed out, in the whole trade chain, and I think even the previous panel somebody pointed out, it is multiple different touch points, human touch points that need to be done, oftentimes mechanically, and are being done by individuals, which can be done quicker, potentially or more efficiently or more transparently by technology. And I think that's where, now to go back to trade finance and your question, I think that's one of the reasons why I think trade finance is where you are seeing a lot of innovation, speed of innovation. And then I want to compare that to something that is closer a little bit to my heart, and part of our portfolio. We finance, for instance, windmills, project finance. Those are bespoke transactions that are on a case-by-case basis. And then I want to draw contrast to the fact, how I started this answer, was in my view, that takes a bit longer. I think I go back to what Estelle says, and I'm a true subscriber to it. And during the course of this talk, maybe I'll give an example of why, of the fact that you need humans, and then digital becomes an enabler. And I think that's probably the spectrum of one end to the other that I feel where technology is being used and will be used. Some places quicker, and some it will come, but a bit later.
Sure, Rajbir. Thanks for your thoughts. I agree as well. So we have assisted automation in place. It is not going to be complete automation, as people say, but it is going to be, in a way, coexistence with technology and human being. It is going to unlock more potential. So we used to have people, like 10 people working on one process. Now we have one person working on 10 processes. That's the difference that we are able to see. And specifically for benefit of our audience, I would like to add a couple of things. So when you look at any automation and digitization process, you need to start with business process engineering if required. And then you need to look at your data workflow, because at the end of the day, unless until you can map out your data workflow, you are not able to automate anything. And you need to make sure that your data acquisition, maintenance, and then disposal policies are very correct in terms of GDPR compliance and other local regulation compliance. And then based on that, you need to think about automation around that process. End of the day, customers should benefit, internal or external. And when you are looking at automation in a greater sense, it includes all the systems. So process mining is very critical. You identify what are the bottlenecks that you are having, and you don't need to automate entire process. You need to automate maybe several critical tasks within that process where you unlock highest potential reward or revenue. So sometimes it is Pareto analysis, like you have 80% of the benefit by automating 20% of the processes, and that is very critical. So thanks, Ravi, for joining us as well.
So, yeah,
So
Vikram,
we already started.
if I can add to what Rajveer has said in terms of
Sure, Raj.
trade finance. See, trade finance is a very, very, again, a very vast subject and very vast area again, and it involves a lot of process, and every small thing has a process attached to it. Okay, so of course, I mean that's again, and every process, let's say, consumes times and resources. Okay, and the more you, let's say, make it more efficient, it's a saving for the banks, higher productivity, and of course convenience to the customer. So if I can just share one example, I mean, like banks do actually commodity finance. That is one line of it. Banks also do export funding, right? Now, so there are very two different lines of funding. So we came across as a bank, we came across this problem that while we were able to do both the things separately, okay, we found a situation where we could do the project, export finance, but some of the clients were not having the traditional security. Okay, so they proposed us to give commodities, basically underlying commodities as security. Okay, so the whole risk in this case was predicated on the underlying security. So what we actually came out, I mean, after a lot of, let's say, research and a lot of, let's say, work on digitizing the whole thing, we were able to actually combine both the products together, and we were able to actually offer export packing credit finance to our customers based on the underlying commodity. So every, as I mentioned, just to basically summarize, every process, I mean, has a let's say opportunity attached to it, which can be, let's say, streamlined and made more efficient. Yeah.
So completely agree with you, Alok. And just to add to what you mentioned, right? So for example, import data processing, and you have this export data processing and monitoring system by RBI, right? When you look at this new digitization opportunity which are available, suddenly when RBI comes up with this data sources and you can connect, then suddenly it unlocks even more opportunity for people to automate certain things and capture certain leads. Absolutely. And create a new system around it. Right? So it is always evolving process. You can't have status quo in automation. It is always going to be that something new will come. You need to take that opportunity and build very rapidly upon that. So yes, great. So Ravi, since you have joined slightly late, I would like you to please quickly introduce yourself, and I will onboard you.
Yeah, sure. Thanks, Vikram. So hi, I'm Ravi. I'm the so I run a blockchain startup by the name of Safopal, and I'm also managing the whole technology at Trade Reboot, the trade finance platform. And I've been IT consulting for almost 21 years, with digital lending as one of the core area for the last 12, 13 years.
Thanks, Ravi. So Ethel, let me ask you this question, and then I will go to Ravi for the next question. So very quickly, what are your thoughts when it comes to overall banking industry and automation, specifically related to payments, right? When it comes to payment, what happens is that payment is transfer of value effectively. And then when you are looking at payment processes, wherever payment processes are involved, then you have much bigger responsibility, not only to detect fraud, KYC, AML, but there are multiple different things involved. So it becomes very critical process. So what are your thoughts on that?
Yeah, payments, just as trade finance and are in the middle of different areas touching the banking sector, and we've seen that the payments have been raised the last years as very high topic and profitable activity for financial institutions, whereas it used to be before, for many decades, just a cost. So it has become an opportunity, just like I would say that digitization has become an opportunity for companies, banks, and all stakeholders to be more competitive, because just digitization is just the end of the processes that have been implemented for decades. IT digitization is just the last mile of IT transformation. And payments, to respond to your question, especially in the trade finance area, is very important, is a very key point. And we've seen many innovations, such as reducing cost of international transfers, and such as, and you mentioned the question of compliance to international rules, and the fight against fraud, and all the payments are directly impacted by all the new regulations implemented since the last years, and asking the bank to be adjunct to the sheriff. So it is very clear to that. So there are many stakeholders outside the banking system that have developed very innovative and technological solutions. And now what we see is that banks are partnering with all these companies. So this is also very new, that we see partnering between brands, whereas before banks were buying solutions, technological solutions, from big providers that were already talking with banks. Now we have a mix of competition and partnerships. And also we see also fintechs that are at the beginning competitors to banks and willing to address the same clients that, like companies, private companies, than banks. And then when have a good solution, they provide this solution with, for example, white label to banks. So what I see is that banks still banks that have understood the necessity to partner and cooperate will survive, but this might be not the case for all banks.
True. Thanks, Estelle. I agree with you. It is like collaborate and coexist rather than compete, because it is going to be much better for everyone.
Yeah, in fact,
so Ravi,
if I can add, Vikram.
Sure, Alok.
So in fact, so many people think that, I mean, fintechs are competing with banks. Actually, I mean, it's not the case. Actually, banks are now actually encouraging startups to actually come out with very innovative fintech ideas, which can help the banks actually. And I heard, I mean, that Citibank, for example, has acquired almost 700 small fintechs in the last few years. So huge. I mean, that's the way forward. Actually, the bank should encourage fintechs to come out with innovative solutions. I mean, amazing kind of solution they are coming with, and which is helping banks gain the competitive advantage. Yeah.
No, true. I agree, because what happens in India specifically, we don't have separate banking kind of license available for this fintech. Right? In US and EU, you have opportunities where they can compete. But in India, you need to coexist and you need to partner with the bank to develop your channel product distribution lines. And then effectively, when you look at fintechs are becoming front office effectively, and then banks are becoming utility companies where they are providing banking as a service. So absolutely agree with you. Ravi, coming to your point. Sorry, Estelle, please.
Yeah, sorry. And banks have the customer base They already have the customers, the companies. They already have built trust in the financial system, and especially in trade finance. It's a global trust, global corresponding trust a network that has been built by banks. So and fintechs, they provide technology. So it's a win-win cooperation.
Yeah, very correct.
True.
Yeah.
And just to add one more point, what you mentioned, right? So specifically in trade finance, you have consortium-led efforts going on, whether it is in blockchain or whether it is process improvement or whether it is something else. So when you are looking at specifically in trade finance, that is something which is very interesting, because when you look at in India, major banks are coming together to create process efficiency and improvement. So this is, I completely agree with you. So Ravi, coming to you finally, when you are looking at automation, specifically when you look at complete automation in trade finance, or you have your system which you have developed as well. So people think about automation as, let's say I can just adopt the technology and start using it, but there is a change management required. What do you think that people need to think about before they either are taking the solution which is ready-made, or they are developing a new solution?
Right. So no, I think that's a very interesting challenge that everyone faces. So the way we have tackled this is, the primary solution that we have built in the trade finance is more of a collaborative networking platform. So the idea is to bring in all the different players, starting from banks and lending institutions to exporters, importers, and various different agencies, whether it be shipping agency, inspection agency, freight providers, insurance companies, etc. So the idea is to bring them all together on a common network, so that one, we can solve the challenges of sharing of documents or information across the trade finance network. Right now, the way we see it is, there's a lot of digitization that has happened in last 10, 15 years. Lot has happened at the level of financial institutions. Lot has happened at the level of importers and exporters. But still, these systems are not talking to each other very well. So the banking systems may touch the exporter or the importer, but it's not seamlessly integrated with the insurance, or let's say the shipping tracking of the consignments, or various other quality checks, etc., where largely they still depend on document sharing manually or through emails, etc. So the idea first was to build a collaborative platform where all the parties can come together. The second is, take each and every stakeholder and build more robust solution, so that they can start using that solution not just within our platform, but for their other customers also. So that's the second leg of it. So the way I see it is, yes, customization, etc., is required. But when we conceptualize a large network, which is technology intensive, so the idea is to go more towards standardization of processes. And we try to see how we can bring in those kind of standardization, so that the process is well thought of, the process is compliant as per the regulations of all the countries which are involved in the trade finance area, and also compliances as per the banks and various parties involved. So that is what the approach that we have taken, so that there is no customization for each and every stakeholder on the network.
Sure, noted. So now I am going to ask few open questions. Whoever would like to add something, please raise your hand, and I will be more than happy to allow you to speak. So first question, when you look at data lifecycle, we discussed about it. Data privacy is becoming more and more critical. And when it comes to automation, what are the things you believe as a user, customer, as well as from the organization perspective, you need to consider when it comes to data privacy? Right? So whether it is trade finance process or whether it is any process, what in your opinion are very critical points? So anyone from the panel?
Yeah.
So I can talk about privacy in two levels. One, and this is one of the core area that we have focused. Because one, privacy as per the regulations that the privacy of each and every user has to be safeguarded, whether it be GDPR or whether it be any other regulations. The second is privacy in terms of when competing organizations are becoming part of a collaborative platform. The biggest challenge with which any stakeholder has is that my data should be secured. There should be absolute privacy of the data that we have. So we are talking today about a large collaborative platforms where multiple banks, multiple exporters, multiple importers will come together. And there, one of the major concerns is that our data should not be accessible to any competing party. So only a non-sensitive data or data which requires to be shared should be shared in such a way so that it is accessible to only the authorized users. And that is where I think blockchain plays a better role than the traditional digital technologies. Because in using blockchain technology, we can have very granular traceability of data. So whether it be ensuring that only the authorized people have access to the data, and managing the complete traceability as to who has accessed the data, when they have accessed the data, and a real-time revoking of the data access. All these features can easily be managed through a blockchain-based data traceability or digital record management. So yes, privacy I think is a big concern. If you want to have this kind of collaborative platforms, this needs to be taken care of.
Yeah.
Thanks, Ravi.
Anyone
else would like to add? Sure.
The thing is, the nature of banking is that it is heavily regulated. I will not tell you how many countless trainings I have to do on a regular basis to remind me not to click on that link that comes in my email, et cetera, et cetera. So imagine now we're talking about two different organizations, a bank going to someone like Ravi or another platform and saying, listen, let's collaborate. And then at the same time saying, here's all my information I'll give you. So I think this is, it's kind of core to this whole issue of growth of, or the promulgation of technology is how do we safely, and banks get comfortable that they safely work with data, because ultimately their neck is on the line. But it is a very key point and something that needs to be looked at.
Yes, I agree with you, Rajveer. So when you look at transaction isolation and atomicity, right, it is very critical when it comes to any data point. And today, fortunately, we have very evolved encryption methodology, and some of this new technologies like zero knowledge proof and homomorphic encryption allow you to work on the data which is encrypted, right? So that is also, in a way, is changing the way people look at the security. And I personally believe security should be by design rather than as a patchwork or afterthought, right? Because typically I have seen when I look at fintech, they are just looking at creating a product which is ready and then start selling and marketing. But then they realize when they approach a bank that, look, these are so many like issues, security issues which are coming, and they are not even testing about it, right? And suddenly you are looking at your investment in technology that you need to redo because of that one security issue that you need to modify now. And that's the reason, again, data privacy security should be by design rather than the afterthought. I completely agree. So now another question, again, open question to you all. So when it comes to several payment methods in the banking scenario, specifically, let's look at SWIFT. So more people are aware about SWIFT, how it works. And when you look at on the broader ecosystem level, there are alternatives which are emerging, which are of course Ripple, or there are more alternatives which are available. So what are your thoughts on new alternatives in payment? Yes, Esther.
Yeah, thank you. I think that all the new solutions that appeared on the market on international payment solutions, competing with SWIFT, has also promoted a reaction of SWIFT and the JPI, for example, JPI initiative from SWIFT that now tries to connect globally all the local instant payment solutions. So you have in Asia, we have in Europe, And so this promotes global competition and innovation. And that's very, very good, because before, all this innovation was made available and possible by regulation in since, for example, Europe, the PSD1, PSD2, and so on. So banks were quite comfortable with just implementing the innovations promoted by the, for example, the international schemes for the cards, Visa, MasterCard, and for SWIFT. So the market was driven by the big schemes. And now the market is more driven by the initiatives. So any small initiative that is responding directly to the usage and making a difference for the company or corporate that is willing to send money at the lower cost and faster abroad. Let me mention, for companies, you were mentioning Ripple, but also we can mention all the Revolut and TransferWise and so on. And I remember I assisted a meeting at SWIFT, I think it was 2 years ago, about the future of SWIFT and future of innovation. And they mentioned the TransferWise several times in the meeting. So new solutions and competitors also challenge the big scheme. So it's very good. And they establish new standards that old traditional stakeholders have to implement. So that's very, I would say, healthy competition. And so
Definitely, right.
Yeah.
Please continue. Please continue. Sorry, I thought that you are finished in terms of discussion. You had something to add? Please continue.
Yeah, just wanted to add that we should not forget that all these big schemes also are here because they were built big with the years, so they also adapted. Some of them are dinosaurs that will die because they don't adapt, but the one who will adapt, they will survive. And they adapt, as you already mentioned, by buying the new technology and then or building partnerships, or there are different forms of it. But it's a global ecosystem that is moving, and it's what makes the thing very interesting. And the future of payments is faster and cheaper, I guess.
True. I completely agree. And you
secure,
have,
I hope.
Sure. Yes, absolutely agree. Because when it comes to payment, you need to make sure that not only you are complying with the regulation, etc., including PMI in India and others globally, but when it comes to B2B payments, specifically B2B payments, right? You have several different considerations when it comes to business to customer or even customer to customer, right? So you have so many solutions available today that each and every solution has its own benefit and then advantages, disadvantages. So we need to look at that. And you mentioned about TransferWise, similar to that Flywire also, I have heard many things about them because they are creating that B2B payments in the market very efficiently, and you can easily use it. So agree with you. Anyone else would like to share anything? Yes, Alok.
A slightly different perspective from payment side only. I mean, see, I'm not from the technology side, so I just talk about how it is helping the bank, this payment solutions in some different way. So these payment solutions are helping the banks in identifying the payment and the payment behaviors of the clients. Okay, which in turn is helping us of risk management also. Okay, and apart from this, it is also helping us banks in identifying newer clients, generating leads, and also helping us in terms of cross-sell to the existing clients.
Sure, yeah. I agree. So just to add to what you mentioned, Stripe Radar, that is a product which has benefited immensely because of how they are able to aggregate different payments, and then they are able to identify using AI/ML the risk score of the payment. There are solutions like Ikata, which is now able to identify based on the social media profile and multiple different data points available, alternative data points available, that how likely that this transaction is going to be a fraudulent or how risky it is, right? So I agree with you. So it allows you to have multiple layers of complexity that you can handle because of how the technology is evolving. So last question, open question, because we are running out of time. So I can see this is one of the questions by audience as well. So when it comes to ROI of your digitization, when it comes to return on investment specifically, what are your thoughts on that? How do you decide on whether to go ahead and do digitization or whether we are okay with employing 5 more people and do it manually? What do you think? Because in India, we are jugaad people, which is good sometimes, but sometimes we don't think long term. We look at something which is very close and then we try to make sure that we are getting things done today rather than thinking about scalability tomorrow. So anyone, please.
Yeah, I'll give it a crack, Vikram.
Sure.
So I think from a bank's perspective, and maybe Alok will jump in as well. ABN AMRO was founded in 1765. I figured that I'd just Wikipedia it today. And the point that I try to make is this is it's not a dinosaur, it's not dead yet, thankfully, but it's been around a long time. And there's no time, I think, in the past. It's probably been through a lot, but there's no time in the past than today that it's realizing that investment in digitization, and it's not a short-term thing, it's a long-term thing. It's got to start ground up. I think many of you made that point. Many of you are more competent than me to make that point in terms of processes and so on and so forth. There are multiple initiatives that are going on. We have a spin-off bank in the Netherlands where we said, listen, unless we behave like a startup, we are not going to compete. So what we did was we actually spun off a part of our bank, and that focused on SME businesses, and they don't live with the legacy 400-year-old technology that this bank might have otherwise. So to me, that's a sign of investment. I think Alok pointed out earlier, there's banks investing in other fintechs. There's $100 million fund that the bank has started to be able to invest in multiple of these fintechs. The point that I try to make is, Vikram, I see no alternative but for banks to invest in technology, to invest in. I'm not saying competing with fintechs. I think what we do have for the 400 years we've been there, Estelle pointed it out, we are clients, we've got relationships, we've got trust, we've got regulated industry, people believe in us. For the most part, there's always a big issue sometimes, but for the most part, they believe in us. And I think that's not going away. But 10 years from now, is a bank 30, 40, 50, 200,000 people? No, it's not. It's far lesser people. There are probably more consultants. And a lot of the work that needs to be done today, as you said, 5 more people, there will be 5 less people, unfortunately, but there will be enough people. So I have no doubt, just to round off, that this is here to stay. And banks who are not moving ahead in this way, they will have to merge or not last.
I completely agree. Just to share my experience, I have been more than a decade with bank, and then I've seen multiple automation projects happening. So typically what happens, people look at automation in silo. You need to look at automation as a culture change. You need to look at automation as a thing which is going to be there with you, but you need to also identify cost of retirement, because technology changes very rapidly. So if you are investing in new technology, you need to also ensure that you are bound to have certain changes, revisions. So you need to have, similar to depreciation, you need to have a different concept here. So it is something which you are spending to reduce the cost of obsolescence, right? So you need to remove that kind of a cost, and because of that, you need to invest more. And when it comes to providing new, not only number of people required for that technology implementation, but also training to existing people. Most of the companies I have seen, they don't invest much into that. And because of that, most of the projects fail, because users themselves are not buying into the technology, right? So how people will be using it. I completely agree. So ROI mainly depends on how good you are able to derive the benefits out of the technology. Sometimes what happens, you have started automation project, and after 2 years you are finishing it, and by the time you are finishing it, the technology has moved on, and suddenly you are looking at piece of technology which is no longer useful. Right? So you need to be agile enough. You need to make sure that from conceptualization to implementation, you are able to get into what you are actually believing that you will get. And I completely agree. Anyone else would like to share that?
Yeah. So Vikram, so apart from, let's say, capex based model of, let's say, digitization, there's another opex based digitization, wherein the banks, or let's say organization, don't spend or do the capital investment. So instead of that, they tie up with these fintechs, and the commercials are basically based on the per transaction. I mean, amount per transaction. So it also takes care of. I mean, they can come out of it. I mean, in future. I mean, if it's not working out. And second, the risk of obsolescence is not on the organization which is getting into digitization.
Correct.
That's another
absolutely agree with you.
which is getting
right. There are three different models. One is that you create your own technology, implement earlier old model of capex vis-a-vis the new model, where what you are mentioning is something is in between, which is called RPA, functional automation, where even users can do automation using RPA tools and then try to derive more quicker turnaround time, agile development. So those things are also coming up. And you can always outsource and then allow yourself to, it is called, specifically when you look at in banking parlance, it is decoupling. You are decoupling your processes and making sure more and more people are able to gain from the expertise specialized in. Completely agree. Any closing comments, anyone? We have already exceeded our time, but we started late. Any closing comments?
Maybe one thing, Vikram, I think you had one other thing that we should speak about. You touched upon it, was on culture and people. I'm quite passionate about that. I like to mentor a lot of young folks, maybe others listening on this platform as well, on what's the future. Should I work on technology? Should I go for a bank? What should I do? I have no doubt that technology is well embedded in each of the jobs that we do today. And maybe for some of us, the boat might have gone a little further out, but others who are getting on that boat should get on with the skill set. I think people are, if I read an article saying JP Morgan starting their associate program courses with training on Python, not because they want to convert every banker into a programmer, but because tomorrow's banker needs to be able to talk the language of a technologist, so that they can, put together a package or whatever, together a solution. And they're not on, one's not on Mars and one's not on Venus, as my wife and I usually are. But I think that's probably something from a HR perspective is quite important to me.
I completely agree. The way people think about skill development is changing, and nobody is able to survive in this market without upskilling themselves, for sure. So I completely agree with you. Yes, Alok, would you like to share?
Yeah. So see, I think so for youngsters it's fine. I mean, people, let's say, who are slightly older, I mean, they need to change their mindset actually. Okay. I mean, digitization is here to stay, and is going to actually get into every aspect of our professional and personal life as well. Okay. So they have to actually change their mindset and accept it and acclimatize themselves according to it.
Agree.
That's very important.
Agree. Dr. Aston?
Yeah, thank you. Thank you for this very interesting panel. And I just would like to add that for me, it's a triangle between trust, security, and technology, and banking, because so it's not a triangle. But we shouldn't forget that it's not only about technology, and it's also about trust. And to build trust, we need to have security, and whatever human or computers create, there are other human and computers that can crack, and so it's never going to end. And so we really need to build very high standards of security, and so for me there is something extra technology that is trust, and I fully believe that there is still a space for bankers.
Sure. Thanks, Estelle. So I agree with you. There is a human element in technology and trust, and then you are bringing more about how the banking specifically used to be a human element and relationship driven.
Yeah.
So I agree with you.
Vikram, can I
Ravi?
One comment?
Sure.
I know we might be a bit over time, but in the beginning, when I started out on the panel, I said hopefully during the course of this discussion, I can bring one point up. Estelle has teed it up perfectly for me. With humans and with technology. So some time back, we did a little presentation, and what we did was on one slide, on half the slide we put the Arnold Schwarzenegger Terminator without the skin, so the skeleton Terminator. And on the other half, we put Luke Skywalker with his lightsaber. And we said, the future of this of technology, in my view, is not the Terminator. It's Luke Skywalker, the trusted Jedi with lightsaber, which is the technology in his hand. So I think that it's kind of an analogy on how the future might be. Let's hope.
Nicely put, Rajbir. Coming to you, Ravi, any thoughts on what
No,
we
nothing
have
much
covered?
to add here. I totally agree with Rajbir and Dr. Esther also, that, humans give meaning to technology. And without that meaning, any implementation or any thought about digitization does not make any sense. So, yeah, and as far as the partnership between the banks, financial institutions, and different fintech organizations, I think that fortunately in the last 10 years has matured quite a bit. A lot of credible partnerships have taken place where benefits or best of both the worlds are coming together to bring in the kind of efficiency which is needed to bring technology to its real conclusion.
Thanks, Ravi. So I thank each and every panel member for being here, and I hope that our audience has got good insights out of the session. Thanks, everyone. Bye.
Thank you so much. Our pleasure.
A pleasure meeting you all.
Thank you.